Inflation looks to be heating back up, yet somehow mortgage rates dropped to a new yearly low after that was announced. How is that possible? We'll discuss in a minute. Housing inventory still looks like it's already peaked for the year, which would be 2 to 3 months earlier than it's peaked in recent years. For the first time in many months, we have a new hottest city in all of Dallas and Collin counties, and it's definitely not a city you'd expect. Both Dallas and Collin counties had a slow week as far as new contracts go. I found some incredible new construction deals in Carrollton, Texas, if you're needing to be just 15 minutes from DFW Airport, that I'll show you. And we're covering all this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas-Fort Worth area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that is in the description below. Okay, today is August 18th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here to get to the latest weekly market update. Let's start with market news. Last week we got the CPI report, and it showed that in July, overall inflation remained flat from June to July at just 2.7%. On a monthly basis, inflation increased just 0.2%, which is down from June's 0.3%. The bad news is that core inflation, which removes the volatile categories of energy and food, increased to 3.1%, up from 2.9%. So core inflation is heating back up. And so far, it's hard to know if this heating up of core inflation is coming from tariffs. And I think a lot of people were actually expecting inflation to be higher because of these tariffs. But either way, it's obvious that the bond market does not see this inflation report as an issue, and they're still counting on the Fed to cut rates in September, which is why mortgage rates not only remained low, but they actually hit a new yearly low last week, even with a slight increase in inflation. They think the labor data is more important than the inflation data. And honestly, I think just a 0.2% increase with all these tariffs going on is actually probably good news for them. Now moving on to my property showcase for the week. This one has 2 primary suites, 5 bedrooms, a 3-car garage, 4.5 baths, and a nice big yard, and is just 15 minutes to Dallas-Fort Worth Airport for way less than you're thinking. It's located right next to all the shops and restaurants of downtown Carrollton, and this is so much house for the price. They've actually got a home in this community over 3,000 square feet for under $800K. And of course, it'll have the low mortgage rate, almost no closing costs, and all of the usual builder incentives. But all these discounts and incentives are just for the homes that close by next month. That's by the end of September. So you'd have to contract it in the next 2 weeks, basically. But they've got like 4 or 5 options to choose from. And the reason for all these big incentives is that for a lot of these builders, their fiscal year ends in September. So they're trying to get as many sales as they can before September ends to show their shareholders just how great of a company they are. But this home has KitchenAid stainless steel appliances, including double ovens and a 5-burner gas cooktop. It's got that huge covered patio you saw. The yards are a lot bigger than most new construction at this price point. It's got those soaring 20-foot ceilings with a modern gas fireplace, and like I said, 2 primary suites. You've got mortgage rate options as low as 4.99% for the first 7 years, or you can just get a 5.5% fixed for 30 years. Plus, they'll give you $10,000 towards your closing costs, so you'll barely have any closing costs. And of course, they'll give you the fridge, washer, dryer, blinds, all that stuff. But all of this can be yours for just $873,000. And like I said, they have another option under $800K that's larger than 3,000 square feet. So if you're interested in buying a home like this, call me right now. Moving on, let's start with national housing inventory. This week, we had an increase of just 972 more homes for sale in the country. You can see it's pretty much just flat. And this actually drops us another 1% down to having just 23% more inventory than we had last year. And this is unusual, as you can see here in 24, 22, 23. We've been peaking in inventory somewhere around October, November. So to have peaked potentially in the middle of August is very unusual, actually at the beginning of August. And the reasons I think this is happening, I think it's a combination of frustrated home sellers are pulling their homes off the market right now when they see they can't get the price they wanted. And a lot of them, they just see more and more inventory coming on in their neighborhood and sitting, and they don't want to have to compete with that. They know it means they're going to sell for less. So those people are taking their homes off the market. That reduces inventory. And then of course, as we're going to see, new listings have been declining, but this is just part of normal seasonality. So new listings should be declining for the rest of the year. So that then reduces inventory. And then lastly, we're having having more sales than we've had the previous few years. Mortgage rates are coming down and they're the lowest they've been all year, and we've still got like 17 or 18% more people applying for mortgages every week compared to a year ago. So I think those are the main factors that could be giving us a very early seasonal peak in inventory this year. And unless mortgage rates go back up, I would expect we probably have seen the peak, but we increased barely. We're up to 860,068 homes for sale in the country. And this same week last year, way down here, we only had 698,161. So like I said, 23% more inventory than last year. That is great news. Now we're looking at new listings, and this week we actually had just 307 more new listings than last week. You can see we barely moved. And something is wrong with the data line, because when I look at the written data, we actually have 797 less homes listing this week compared to last year. Even though this line looks like it went down, it actually should be slightly higher. So I don't know what's going on with the chart, but the written data says 797 less homes compared to last year, for a total of 66,679 new listings this week. And again, part of this is just seasonality, but I think the other part is a lot of sellers have realized they're seeing a lot of price drops, a lot more competition in their neighborhoods, and they just want to wait it out and see what happens. Now, I'm not saying that's the best strategy, because no one knows what's going to happen, and they very well could just be waiting and competing with more and more inventory. So I'm not saying that's a great strategy. I'm just saying I think that's what I'm seeing here. Now, looking at pending sales actually saw a nice bounce this week of 3,557 more homes pending, which is actually this gap here. It's 11,901 more homes pending than last year. So that's part of what I'm saying is that's another reason why inventory may have peaked earlier. We're having a lot more sales this year. You can see consistently more sales this year than we had last year, for a total of 377,582 homes under contract. And you can see overall, we're just going to continue trending down for the rest of the year. Now looking at weekly pending sales, you can just call these new contracts. This week, new contracts increased by just 826 homes. And even though we dipped down and had a gap of like 4,500 homes last week, this week we actually had 555 more homes. So you can see there's a big spike this week last year, and then it came right back down, and we actually have 555 more again. But overall, you can see we are trending more and more new contracts compared to a year ago. And we had a total of 67,173 new contracts. Then the last thing we cover nationally is the percentage of homes having price decreases. Every year it's normal for a third of homes to take a price cut before selling. Looking at the national chart, we've been pretty flat the last few weeks, very slowly going up. This week we climbed 0.2%, so we're up to exactly 42% now. And you can see we've been trending very similarly to last year's line, which means we're somewhere around the peak now. We're probably gonna flatten out here and then come down for the end of the year. I don't think we're gonna reach 2022's numbers, but last year we got as high as 39.9%. The year before 39.2, and then in 2022 we got as high as 43.2%. And like I said, I don't think we're going to get there this year. I think we're probably pretty close to the peak at this point. So I think we'll get to 42 point something, and 2022 was 43.2. But just so you know, if you want home prices to continue down, this number will need to keep going up. And then you should also know this slope of the red line ended up translating into about a 4.5% home price increase for the year. So obviously we're higher than that. I would expect this year is going to be a less than 2% when we have all of the data for the year. And that's unless mortgage rates drop significantly at the end of the year, which I think they'll still drop a little more, but I don't think they're going to get as close to 6% as we would need them to really have prices go up. Then moving on to mortgage rates, you can see we started at a 6.58. Rates got as low as a 6.53 after we got the inflation data, and that's a new yearly low. You can see 6.53. The previous was 6.60. So we have a fresh low for the year. Then looking at mortgage purchase applications, we had a 1% week-to-week increase, which puts us at 17% year-over-year increase. That's the difference in these two lines in the number of people applying for mortgages, which gives us 25 straight weeks of positive year-over-year growth. And this is the data that shows you 30 to 90 days ahead that we're going to have more pending sales like you've been seeing all year. So think of this as a forecast telling us that we are going to continue pacing at more pending sales this year than we had last year. But already, even before rates dropped, there were more and more people applying for mortgages. And I would expect that if rates can stay here or even trend lower throughout the year, then this number is going to get even higher and we're going to see more sales. Okay, now we're moving on to the local markets. We're starting with the MLS data of Dallas County. And this week we had 579 new listings, which is 20 less than last week. Again, just like the rest of the country, we're seeing less new listings, but that's normal. We should be trending down for the rest of the year. We had 303 closings, which is 48 more than last week. This is an anomaly week. You can see if you average these three out, we'd be right around that same 300 we've been at. So not really unusual if you just average them out. Of the homes that closed, 49 were immediate sales, meaning they contracted within the first week. That's 8 more than last week, but again, I don't know what happened last week, but if you average them out, it's still just normal. 288 new contracts, that is 3 less than last week. But again, outside of this 326 week, 288 is right in the ballpark. For a total of 2,186 homes either under contract or pending, and that is 32 more than last week. Looking at the same thing for Collin County, we had 479 new listings. That's 2 less than last week, which does look quite a bit less than we've been seeing. But it also correlates to the national data of we should be trending down on new listings. We had 240 closings, that's 6 less. And so the last 2 weeks in Collin County have definitely shown lower closings, because you can see we had 301, 329, 250, 260, 308, 338. So it's definitely on the lower end, and actually we haven't been this low since right here at this 217, 214, 239. So basically since the beginning of the year up until week 15, we have not seen this low of closings in Collin County. But remember, these closings are happening on contracts that happened 30 days ago. So 6 less than last week. Of the homes closed, 33 were immediate sales. That's 3 less than last week. We only had 173 new contracts. That's 19 less than last week. And we actually have not had this low of contracts in a single week since week 5, 169. That was the closest we got to 173. So very slow contracts week in Collin County. And that's 19 less than the previous week. And in total, there are 1,957 homes either under contract or pending in Collin County. That's 40 more than last week. Now moving on to the Market Action Index, starting with Dallas County. If you've never seen it, it just takes into account all this data, puts it into one easy to read graphic with a number. Anything a 30 or below would be a buyer's market. Above a 30, we're asking how much of a seller's market are we in? We are currently at a 35, which is a slight seller's advantage. We've been around 35, 36 for a long time, but all we use this data for is to see, are things looking normal or is there anything we should be concerned about? Normal for this time of the year is things should just be cooling off for the rest of the year. And really things peak around May and cool off the rest of the year. So a lot of people think it peaks in, July or August. It actually peaks in May. But median list price remained flat this week at $415, but you can see the trend is obviously down since May 30th. Median price of new listings is holding a lot more flat than existing homes, where we actually went up a little to $393,950. But you can see still the overall trend is down. We're just more flat right now. Average days on market saw an increase back to where we were August 1st. We actually somehow went down 1 last week, but we're up to 95 again now. Same with median days. We had a dip for 1 week and now we're back to 63. Same with price decreases. We had a dip and now we're back up. We're not the highest we've been though, 49.72, and we had been at 50.52. So pretty much flat, which is similar to nationally. Inventory, 6,070. Inventory is decreasing here, which is the same as nationally as well. And the Market Action Index went from 35.25 to 0.16, so very little change in the Market Action Index. You can see it was trending down pretty hard. In the last few weeks, it's been going a lot more flat. But overall, everything's looking normal in Dallas County. Let's move on to Collin. Collin County is always a little cooler than Dallas County. It's a 33, slight seller's advantage. Their median list price held firm a lot longer, and now it's come down quickly the last 2 weeks. So in the last 2 weeks, from 545 down to 532.5. I think it's likely we'll see it come back up a little bit next week. Median price of new listings, kind of same as Dallas, where it's not at the lowest. It's going a bit sideways right now, but overall you can see the trend has been down. That's at 475. Average days on market, their average and median did not ever see a dip last week like Dallas County did. They went up 1 to 84 on average. The median only shows 7-day increments, so they finally hit whatever threshold got them up to 63 now. Their price decreases are still increasing. They are at the highest they've been, 57.94. So you can see obviously Collin County is a much cooler market than Dallas County, but it's still normal. their inventory is decreasing, the same as nationally, 93 down to 74. And their market action index as well, you can see it was trending down a little quicker. It's getting a little more sideways right now. So Dallas County is obviously hotter than Collin, but both of them are looking totally normal for this point of the year. Now moving on, I just wanted to show you the pending charts for Dallas County. I really just want to show you how many more sales we're having this week than last year. You can see the black line on top. That is the number of pending sales, and for most of the year we've been trending quite a bit higher. We had 1 week where we touched about the same here. We're still trending higher than the previous 2 years. Collin County, of course, has been trending way higher. Every single year you can see how much it grows. That's because it's one of the fastest growing counties in the entire country. So you can just see that reflected here in the pending sales every year, but still having way more sales than the previous 2 years. And now moving on to the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. These are ranked using that same market action index number we just discussed. So the absolute hottest zip code, which it has been Grapevine for months and months, and this week out of nowhere, Lancaster heated up one to take the hottest city spot at a 41.9. And actually Duncanville heated up 2 spots to take number 2. These both came out of nowhere just the last, I don't know, maybe the last month. They jumped on and just started climbing quickly. But that's our new top 2, and then Coppell heats up 2 to take the 3rd spot. Carrollton cools off 1. Grapevine, which had been number 1 forever, cooled off 4 spots. Then Grand Prairie, Richardson, Garland, and Irving remain. And DeSoto jumps onto the list, replacing Hutchins. Then we like to zoom into specific zip codes. The absolute hottest is Irving, Texas, 75061 at a 46.12, followed by Lancaster, 75134, Dallas, 75241, Duncanville, 75137, Grand Prairie, 75052, Lancaster, 75146, Carrollton 75010, Carrollton 75007, Coppell 75019, and Dallas 75206. These are the absolute hottest zip codes in all of Dallas and Collin County. If you have a home there, you should be able to sell for top dollar. Then looking at the coolest cities list, Leonard, Texas remains the coolest city this week at a 27.5. Blue Ridge cools off 2, Rockwall heats up 1, Whitewright cools off 3, Salina cools off 1, Van Alstyne heats up 3, Sunnyvale heats up 2, Lavon cools off 1, Royce City heats up 1, and Anna heats up 1. So all of these cities are below a 30, which means they are all officially buyers markets at a city level. Then looking at the zip codes, the absolute coolest, of course, is Leonard, 75452, then Rockwall, 75087, Dallas, 75204, Blue Ridge, 75424, Dallas, 75254, Whitewright, 75491, Salina, 75009, Van Alstyne, 75495, Dallas, 75203, and Rockwall, 75032. Again, at the zip code level, these are all buyers markets as well. As always, if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that info is in the description below. Thank you for watching. I'll see you in the next video.